with Binance, some of these things are a huge surprise. For instance, what they did with these two market makers.
Sounds quite similar to what happened with FTX.
They took these funds and they transferred to Sigma.
Okay.
And what did Sigma do with it? They bought a yacht.
They bought a yacht. Hi everyone, we are Francesco and Maren from the Crypto Valley in Switzerland, and today we will talk about the two lawsuits that SEC has filed against Binance and Coinbase, the two biggest exchanges. We will go into the nitty-gritty details of the two different lawsuits and we will compare them to see the difference. So stick around to know more about this. As always, we will watch a short clip from Gary Gensler on what he has to say on the SEC charges.
Look, we don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, it's called the yen. They're all digital right now. We already have digital investments. And you have entrepreneurs representing digital investments on this program all day long. And it's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world. So what is the real underlying value of these tokens? And that's why you need full, fair, and truthful disclosures.
So Mares, it's been a big week in the crypto world. We have seen the SEC has sued two big companies, Binance first on Monday and then on Tuesday Coinbase. So let's start with the first one, Binance, which was sued on Monday by the SEC. Let's see what happened there and then we will go into what happened at Coinbase.
Yeah, exactly. So Binance started a long time ago. Maybe we need to go back when Binance was created to understand what is going on now. Because Binance was created in 2017 by ZZ and it grew quickly to fame. So it became very big within a year. I remember like 1 year after its inception, it was already the biggest exchange worldwide.
I remember because I really started trading on that on 2017-18. I really remember those days.
Yeah, and a lot of people started trading on there because there was huge, I mean, a lot of products were there.
Yeah.
The selection of products was much broader than everywhere else. Also, a lot of people like the user interface, for instance, it was also big. And also you could do derivatives. So this was a big thing. And a lot of people liked it, so it became huge. And then also a lot of US citizens started to like it. But then they had a problem because they knew they couldn't offer these products to US citizens, especially not these derivative trading. So they thought about what can we do, and they came up with a strategy called Tai Chi.
Okay. And what is this Tai Chi? What is this Tai Chi strategy? Interesting.
So the strategy is to set up a US subsidiary of Binance, a Binance US, and to keep it separate from Binance.com. So you have two separate entities, Binance.us and Binance.com.
Why did you have to do this exactly?
They needed to do it in order to separate like US citizens from Binance.com so that they cannot access it because these servers were illegal under US law.
Gotcha.
And they came up with that strategy to set up Binance.us.
Right.
And also what was interesting from the beginning, it was meant to be a distraction for the regulators.
Right. Okay.
So just set up this structure, distract the regulator and kind of say to the outside, yeah, we will get these regulations, but they never intended to do it. And also they were ready to pay some fines for violation of securities laws of the US. Most important thing was that Binance.com was not affected, especially CZ was not affected, that it could not get in troubles with the SEC. And the plan became public, so Forbes listed it, was a very well-written article, and they then executed it. And maybe I can quickly show like how the structure is set up.
Yeah, let's look at the structure because I mean you showed me before, but it's quite interesting to say how intricate is the Binance structure at the legal level.
Exactly. So what we see here is the structure of Binance, and on top of it is ZZ. And what we see here is this Tai Chi structure, which is Binance.us. And this is owned by a Cayman Island dominated by a company located in Cayman Island. This is called BAM Management Company Limited. And this in turn is already again owned by CZ. Then CZ also owns Binance.com, which you see here. But the thing was really, these two need to be separate because otherwise they would run into troubles with the SEC. They knew that. So this is the structure which they decided to go for. And now the SEC has actually filed charges against Binance, and it all comes down to this structure. So maybe we can go into the nitty-gritty details about
what are they charging them, or what are they suing them for? So we see early in the year they sue them and they stop their stable coin, and now again they are into trouble.
Yeah.
What are they charging them for?
So what you can see here is the lawsuit of the SEC against several entities. We will put the lawsuit into the description of the video so that you can also see. And what you see here is who is actually the defendant. So they are suing Binance Holdings Limited, then Binance US, which is called BAM Trading Services Incorporated, and then also the mother company and CZ personally. So this is the lawsuit. Now when we go into what do they accuse them of? So to summarize, the summary is they say Binance is in blatant disregard of the federal securities law. They have enriched themselves by billions of US dollars while placing investor assets at significant risk. That's what the lawsuit is about. Okay. And now the first one is they said that they unlawfully solicited US investors to buy, sell and trade crypto asset securities through unregistered trading platforms available online at Binance.com. So they're saying Binance sold securities to US citizens without proper licensing.
Proper license registration.
Exactly.
According to the US.
I mean, the last video which we did, we saw it with Bittrex. This was exactly the same allegation. And then what they say especially is that Binance and Binance US, so BAM Trading, they execute three essential securities market functions: exchange, broker-dealer and clearing agency. Yeah. Maybe we go a little bit into details a little bit later on when we talk about Coinbase.
Yeah, exactly, because for some of these buying on Coinbase has been similar.
It's been and this was also the same with Bittrex, for instance.
Right.
Then they also said here, what you already said, BNB and BUSD are securities and they sold them. Also, staking is considered investment scheme. They have no license for that, so therefore they are violating like US securities law. Then, now it becomes a little bit more complicated, because what they said is Binance did make misrepresentations to investors about controls on their platform when they raised funds. So what do? I mean, we can go into the lawsuit. So what did they do? Well, they said they have controls in place. For example, during a public CoinDesk webinar, they said that they are monitoring the market and making sure that no false trades happens on the platform, that they have these processes in place. Right. Here we see again, they say they deploy human intelligence and artificial intelligence to ensure the highest level of compliance, that they have a robust trade surveillance system to make sure that especially market makers don't fake transactions on their platform, that there are no fake trades. Right. And this was not true. So never had they any such system in place. That's at least what this lawsuit said, but still they raised money from US investors. So it's important for startups not to claim false things when they're raising money, especially. Of course. So this is one further allegations. And now when we go a little bit deeper, then they also said that they took a multi-step plan to evade US laws. Okay. And this was what we talked before. So, for instance, they publicly claimed that the Binance US is independent, but this was not at all the case. Because if you see here, ZZ had a lot of control.
And this has to do with the structure that you just showed us. That, I mean, they try to avoid falling under or having control on the US entity, but actually comes out that they control the...
So they knew exactly. It's very important that Binance US is separate from Binance.com. Right. But of course they wanted to keep all the returns, so they made sure that CZ has a lot of control. And this went quite far. So for instance, what they did was they encouraged US citizens to use VPN services, to install a VPN service, because they knew because of the IP address that these are US citizens and they wanted to keep their customers, so they basically told them that they should use a VPN client. But I mean, they couldn't say it directly, so they just gave them some hints. So basically, you should use a VPN service. This was one thing. And as you also said, CZ had a lot of control over the Binance US. For instance, he had to approve every transaction which was worth more than $11,000. So for instance, once there were some hoodies and they need to get approval from CZ, like the multi-billionaire, to buy some hoodies.
That's crazy.
Also,
so basically it was really like controlling the nitty-gritty expenses. So it was really involved.
It was not at all independent. It was under full control of Binance.com. Now we are getting into the worst allegations.
Yeah.
So the worst allegation is because they were not registered, they could do with other exchanges could not do. And this all comes down to using funds. So what did they do? Going back to this structure, what you see here are two entities called on the right hand side is Sigma Chain AG and Merit Peak Limited.
Yeah.
And
what are those?
These are two entities which are controlled by CZ 100% personally. So there is a huge conflict of interest. And one of them actually is interesting because it's based here in Switzerland, and you can also look it up. You can see that CZ was once president of the board of the company. Wow. And so Sigma Chain was is a market maker which is very active on Binance.com and serves as buyer and seller of these assets. And now, when we get into the claims, it becomes interesting because what you can see here is Sigma was the main market maker of Binance US.
Right.
And it was instructed to do so by CZ. And what did they do? So they used the accounts of Binance.us, of Binance.us, and then they transferred the money to this market maker, to this independent supposedly market maker. And what did the market maker do?
So they took funds of US customers and they transferred it into this market maker.
So that's the interesting point. So it doesn't state now whether they were funds of customers or not.
Okay.
It's just like they came from Binance.us. Unclear whether it's customer funds or it's funds of Binance.us. But anyway, they took these funds and they transferred to Sigma.
Okay.
And what did Sigma do with it? They bought a yacht.
They bought a yacht.
So for 11 million, they purchased a yacht.
And there is written here. Huh?
Yeah, exactly. I mean, I don't know where the yacht is, but anyway, they did it.
That's insane.
And of course, this was a huge conflict of interest. And then what's more, another thing which is interesting, they had another problem is that they didn't segregate customer crypto assets from customer of the firm's asset. So it was not clear which funds belong to whom. Yeah. So these are the allegations against Binance. I mean, to sum it up, what do they say? Well, they said, you're violating securities laws from the US because you're offering BUSD, BND, and some other services, staking, for instance, other tokens as well. Then they also said you defrauded investors because you said that you have these trade surveillance in place. You didn't have them. But by far the worst allegation is clearly that they used these market makers and they traded on Binance and Binance.com, Binance.us, and used funds of whoever it was.
Which sounds quite similar to what happened with FTX, because there was also the same case. This change and the hedge fund market maker Alameda Research that was exactly doing the same. So it sounds a lot like this, actually.
Yeah, and it's funny because the Binance.us, there was one service, one market maker providing other services, OTC services, and it was Alameda. So, but honestly, like it's bad, I would say, but it's unclear whether they used customer funds or not, because that's something which is not stated in here. But anyway, it's super bad because there was clearly conflict of interest and transfer of these funds from entity to entity without any oversight.
So what do you think is going to be the consequence for Binance? I mean, these allegations.
These allegations are really serious, I would say, and so Binance will have a hard time in the future. This will take years to resolve. We saw now major outflows of Binance, so over 1 billion outflows. After we saw what happened with Binance on Monday, it would be interesting to see what happened on Tuesday when
So now we have the news of Tuesday that happened similarly to what happened to Binance on Monday. So actually the SEC sued as well Coinbase, as we've seen. I mean, we already kind of knew that this was going to happen with the Wells note that they sent them a month ago or something.
We did in the last video.
We talked about in the last video, they received this Wells notice, which is a preemption that they were gonna sue them. And actually it happened on Tuesday. So looking at here in the summary on the suit that actually the SEC is filing against Coinbase, you're gonna find the link in the description if you wanna read the whole file suit. So what's happening is that the SEC is suing Coinbase and Coinbase Global. Coinbase Global is the holding company of Coinbase, basically. What's interesting is here they are not suing the CEO. Well, on Binance is the case. They're also suing the CEO, while here they're just suing both companies. So quick recap: what's the plaintiff on this is that Coinbase merged three functions that are typically separated in traditional security markets. So those are brokerage, exchange, and clearing agency. So basically, the SEC is suing them for doing all these three functions into one, and they haven't filed any registered. They haven't registered with the SEC for none of those.
Yeah, exactly. So like on the New York Stock Exchange, you have these entities, but these are separate. And here, Coinbase is merging them into the same entity, but has not a license for any of them.
Exactly. So exactly, the problem is that they are doing three functions that are normally distributed into other parties, and they haven't registered any of those. So according to the SEC, Coinbase has acted as an exchange, broker, clearing agency without registering as an exchange, broker, or clearing agency. So those are the allegation or the violation. According to the SEC, exchanges, broker-dealer, and clearing agencies, as we already say, they have to be separated. It's interesting to know why this has to be separated and why in the case of Coinbase it was not. The separation of these core functions aims at minimizing conflict between the interests of security intermediaries. So what we talked today, even before, is that these three functions needs to be different, otherwise to prevent conflict of interest. Otherwise, there could be mishandling of customer funds and less protection.
Okay, so the first allegation of the SEC against Coinbase is that it operates as a stock exchange. It doesn't separate these functions. Yeah. What other allegations is there? The
allegations are that they are offering unregistered securities. So basically, they are offering cryptocurrency assets, and those they consider them securities.
And which crypto assets are affected by this?
According to the SEC, there are 13 cryptocurrencies who are deemed to be securities, and among these we have the most known cryptocurrencies that we all know: Solana, Cardano, Polygon, Sandbox, Chillit, Near. All of these are deemed securities, and in this lawsuit that they filed, basically they describe each one of them as well, and they explain why, according to them, these are securities. So what's also another point which is quite interesting is that Coinbase then is saying, why did you allow us to do an IPO back in the days?
They are listed in NASDAQ.
They are listed in NASDAQ, right? And now they're coming back to them and telling them, okay, what you're doing is completely illegal. Well, it's quite interesting because they actually addressed this point into the lawsuit that because Coinbase told them, well, you should have blocked us since the beginning if all we were doing was not...
it was transparent.
It was transparent what they were doing, and to be honest, what they're doing now is not that much different than what they were doing in 2021, or when they... I mean, actually, so it's quite interesting because according to do an IPO, you need to register. You need to do a Form S1. It's called. So you need to submit it to the SEC. They need to approve it. And here they actually said that they declared it effective as of April 1, 2021. But what is interesting is that declaring effective a Form S1 registration statement does not constitute an SEC or staff opinion or an endorsement on the legality of an issuer in the underlying business. So basically they are like washing their hands, saying, you know, even if we said that it was all good, we are not endorsing the legality of your business. even if at the time we said it was fine, we're not like we're cleaning our hands with this.
Because we already know what the next step will be, because Coinbase will then file a response, and this will state, well, you approved on our S1 filing, and there wasn't a problem back then, why is it now a problem? And now the SEC is just saying, just because we approved on the listing doesn't mean that your business is legal.
Exactly.
But I mean, in the end,
exactly.
It's kind of weird if they approved it before.
Exactly, it's kind of weird if they approved it before and now they're coming back and saying, well, all you're doing is basically legal. To conclude on Coinbase, on the allegation is the staking program. The staking program, they're saying that the reward structure of the proof of stake consensus mechanism used by blockchain to reach agreement about which transactions are valid. So basically, they're saying here that for the user, the reward that the user are receiving out of the staking service, these are of course securities, and therefore they should be regulated as a broker, as a broker dealer.
So the same as with Kraken, we saw it in the last video which we did. There was exactly the same accusation.
Exactly. And therefore, some consequences for Coinbase is that they're gonna really have a hard life in the US. I really think they have a hard life, and actually we have seen already in a couple of the videos from the CEO of Coinbase that they are thinking of moving abroad.
But I think they have an even bigger problem than Binance, because Binance is historically from Asia, so they have bigger operations, and I think they can survive outside of the US. But I mean, no way Coinbase can survive without its home market. Yeah,
so the CEO, Brian Armstrong, said that they were thinking about moving part of the operations into Great Britain or UK because it's their second biggest market.
But still, the US is the home market, so even if they move like some employees, if they cannot serve US customers, I don't know how much revenue, but a substantial part of the revenue will fall away.
Yeah, it will definitely be a big problem for them. Now we have seen the two lawsuits that the SEC charged against Binance and Coinbase. Let's compare them. What do they have in common and what are the differences?
So the commonality is they're saying, like the SEC is saying, both of these huge exchanges are selling securities. And they're saying some of these tokens are securities. That's exactly the same. And if you're selling securities without license, which both of them do, then you need a license as a stock exchange, and both of them have neither of it. What is also the same is they're saying like that they don't separate these three functions which you mentioned. So broker, dealer, stock exchange, and clearing agency. So this is the same. But what is different is interesting. I mean, Coinbase, for instance, has a better governance structure. That's quite apparent. And they have less problem of insider trading, conflict of interest, and so on. Because you clearly can see that within the lawsuit, which we presented to you, you can see that Binance is commingling customer funds, using, transferring
within market makers and holding companies.
And I didn't read in the lawsuit of Coinbase that they bought a yacht or something like that.
No, exactly. To be honest, comparing the two, from the two lawsuits, I mean, Coinbase is being charged for having these three functions into one, simply. While Binance, it looks much more, much heavier, because first of all, they're charging, they're suing the CEO, and as well they are doing some commingles which are not very clear there.
Yeah. So
also the market makers were involved into this, similar to what happened with FTX.
Yeah. Honestly, yeah, you're right. I mean, for looking at Coinbase. From the last video which we did, it was quite clear that something like that could happen. But with Binance, some of these things are a huge surprise. For instance, what they did with these two market makers, and that they used some of the funds, transferred it around, and did some kind of had huge conflict of interest.
Seems that they don't learn really from the past.
So the SEC went after the two biggest crypto exchanges within 2 days. I mean, this must affect the crypto industry. What are the consequences for the crypto industry?
For the overall crypto industry, I would say that it has good and bad parts. So the bad part in the short term is that it affects it really bad. It makes it look like really bad, especially the actors. But I think it's good that they are somehow trying to regulate it, because some of these potentially are not really good actors. Like Binance and CZ, since the beginning, they always try to avoid being registered. They always went from jurisdiction to jurisdiction, trying to avoid the laws, basically. So these are not really good actors that we should take. I should use them as a role model. So I honestly think that for the whole crypto industry, if some of these players who are not acting necessarily in good faith, or they are not doing exactly respecting the laws, potentially could be good that there is some cleaning, like has been with the fact of FTX.
Yeah, exactly. So if someone took out FTX before, be it the SEC or someone else, I mean, this would have been actually great for the crypto industry. And now they try to avoid that this happens again.
Exactly. They're trying to avoid this. Moreover, what I would like to add is that trying to regulate these exchanges is not a bad thing, honestly. As we were saying before, see, if these exchanges are centralized, there is potential conflict of interest within the enterprise. Therefore, you need to regulate it to protect the investors, to protect the users.
So also, like in the DeFi world or in the blockchain world, you would say you need to regulate the central entities.
The central entities are much different because exactly you are taking away the trust and putting it into the code. While here, they are not decentralized. They are not like they are not controlled by code, but there are actual people, and it's centralized.
Yeah.
But there, then you need to ensure you need to put regulation and regulate them, because otherwise you might have problems. And therefore that's why it exists, and that's why normally clearinghouse, exchanges, and broker-dealer are three separate things, while in this case they are all into one. In the decentralized world, some of these issues, I would say most of these issues, are not into consideration because the trust is embedded into the code.
And what's your opinion? Is it also a chance for now DeFi to thrive? Because some of these big centralized players have big problems as well, so maybe we see a rebound of DeFi?
Definitely. So I definitely see like DeFi a good opportunity to thrive. So first of all, these big companies, for some reason, in the US at least, they cannot comply. They don't want to comply / they cannot comply. Yes. For DeFi, you don't need all these intermediaries.
So there's a really difference between the centralized entities and the decentralized ones, and it's good if you regulate the centralized to a certain extent.
Exactly.
So also to clean to make sure that they work properly. For instance, Binance, that you don't have these conflict of interest. But DeFi should be not affected.
Should not be affected. I mean, there should be auditing on the smart contract whenever there is a new protocol. But other than that, the trust is embedded into the code. There is no people that can manipulate there. While in this centralized entity, there can be manipulation, and there can be people, and so users are not protected unless there is regulation.
So moving to the next point, we did recently a video about war on crypto. The US has declared war on crypto, and now we have seen two lawsuits within a very short period of time against the biggest and the second biggest crypto exchange which is out there. And we see much more regulatory enforcement of the SEC. What do you make out of these two lawsuits? Is it like, are there some isolated incidents, or is it really like a policy pursued by the SEC declaring war on crypto and trying to kill it? What is it?
SEC is definitely trying to kill the crypto industry, at least in the US. They are trying to do everything in their power to obstaculate, to complicate the life of any startup, any company trying to operate in this space. We don't know really why. We can just make an assumption why this is the case. But honestly, if they were not trying to kill the industry, they would provide new regulation for this. But they are clearly not doing it.
So do you see any future of the US crypto industry at all?
Not in the short term, not in the short, medium term, unless there is a change in government and potentially there is a change in the SEC.
Yeah, so I completely agree with you, because what you see here, so they went after these two biggest crypto exchanges and they went after all of them. I mean, you cannot offer them because every token is a security, so they cannot offer anything. You cannot stake them, you cannot do derivative trading, you cannot do anything with it. So how do you want to operate within the US?
It's impossible. It's definitely impossible to operate. As of today, for all of them, is literally impossible.
To conclude the video, we saw that the SEC went after the biggest 2 crypto exchanges, so no one out there is safe. I think we can say that. And they are putting more pressure on the US crypto industry. And what we also see, this is a chance for the crypto industry in general, because it's not a bad idea to take out these bad actors, and also it still provides opportunity for DeFi to thrive, so that people then can actually take self-custody, use their own wallet in order to access DeFi.
Yeah, it's good for them to regulate these centralized entities, because otherwise user might be at risk. We hope you enjoyed this video, so put a like if you like the video and subscribe to our channel to be up to date with the latest news in the blockchain crypto world and all it's related to the fintech industry. Thank you very much and see you next week.